So thank you so much for that, Weber. I welcome my co-panelists, Rohit, Anil, Anurag, and Sathvik to this panel. Uh, Obviously we are all going through tough times, and appreciate you guys taking out the time. Hope all of your family, your employees, and everybody associated with you is staying safe. Uh, but for the moment, let's all jump into the panel. So today, what we're going to be talking about is how tech is shaping finance. We hear a lot about, digital payments, disruptive technologies. Cryptocurrency has been the flavor of the season for quite some time now. Across the world, across the spectrum, the way payments are done, the way investing is done, the way entire finance, their entire financial system is managed, has gone through a metamorphosis over the last few years. But as of today, over the last year or so, the pandemic has changed that even further. Everything needs to be touchless. Everything needs to be, safe and secure because distances have grown. And obviously, in parallel with or without the pandemic, a lot of emerging technologies have been driving the way the future of finance would look. So to jump into this, today we'll be talking about how digital payments and investments have changed over the years. What are the opportunities and challenges it's bringing for financial businesses, banking and financial services, other businesses that rely on payments heavily, especially with respect to customer data, privacy, and management of risk, because all new sorts of concerns and frauds, etc., have been emanating. How do we manage those? But more importantly, what are the possibilities that emerge out of the entire digital payment and investments ecosystem? We'd also want to talk about how emerging financial technologies are changing the way finance overall is being managed, both from retail that affects all of us in our day-to-day lives, as well as from the corporate perspective. How B2B or how businesses itself are managing their businesses. And the topic of the day: how are digital and cryptocurrencies changing the way payments are done, changing the way how finances are managed. We've got companies investing substantial amount of their savings and cash into cryptocurrency. What are the risks that are associated with that? And ultimately, what is it leading to in terms of evolution in terms of the future of finance? How do we see the world of finance looking 5 years down the line, 10 years down the line? And what's the outlook for our economy, and how will it change our lifestyles? So the way I thought we could start this is go around the table, hear a little bit about each of you, and your organizations, and your overall view on the panel today before we dive deeper into the topic. So I'm just going to go in the order. It's a random order that I see on my screen here. So we'll start with Rohit. So Rohit, if you could just let us know a little bit about yourself, about Ensuredit, and your views on the panel today.
Sure. Hey, Prasar. Pleasure connecting with you and the rest of the panel here. I'm Rohit, and I'm my co-founder and CEO at Ensuredit Technologies. We are in the InsurTech space. I know a bit digressing from the topic today on future of finance, but BFSI kind of being part of the entire finance industry. So we'd like to kind of share our thoughts and views in terms of what we are doing in the market. So Ensuredit is an InsurTech player, and we are primarily working on the sales and distribution side as that kind of a phase one approach of us. Working with incumbent players, insurers, not just on digitizing their sales and distribution practices, helping them on claims and fraud, and also working a lot on deep tech from a perspective of basically mapping the entire census data of India, overlaying it with a lot of geospatial and other parameters to make it as a unique offering in the market for sales distribution, for your simulations and things of that nature. So prior to Ensuredit, I used to be a director at Ernst & Young out of their Hong Kong office, and was heading up their entire business initiatives for Asia Pacific region in BFSI space. Before that, was a director with PricewaterhouseCoopers, and was heading the BFSI space for North America, based out of New York. I've done that role for around 15 years and been involved in go-to-market strategy with a lot of global investment banks, MDBs, and insurers. Worked with multiple banks in the space of investment banking primarily, in setting up their IB desks, as well as with a few insurers on the AUM side of the things. And the last few years in my career, I was working very closely on the emerging technologies front as a business unit that the Big Four were kind of building at that point in time. And the last program I did with the PwC is something of very interest to what we're discussing today. It's purely, you can say, more from a big data perspective, and it's called the Consolidated Audit Trail that we were working with SEC and Fed in the US. I think that's the biggest data repository of any kind globally that's being built right now, which receives more than 80 billion data records on a daily basis. So anything that you do from equities market perspective, whether you're selling, buying, canceling, or a futures and options perspective in the US market, gets reported to this repository. And the core things and the core premise that you want to talk about today is around data security, personal information, how do you kind of handle PII information, and how RegTech was completely changing because of what we were doing on the CAT space. So that's a bit about us and what we are doing in this space, and a bit about me. From today's topic perspective, I think there are two key things which have happened in the entire BFSI industry. The BFSI industry has been primarily a iterative design thinking approach. That's been the focus from a BFSI perspective. I have a process. How do I take this process and put it onto a digital dashboard? Whether it's a mobile phone, whether it's a web-based app, or whatever it is. But what startups and other competitors or new age companies are doing in the market is more of a first principles design thinking. That they're just saying, hey, we know that this is how it is done today, but how do we change this entire ecosystem? Now that has forced a transformational change for traditional players, incumbents in the market, to move from what they were trying to do. For them, digital or moving towards more technology-led approach was primarily around take my process, automate it, give it to the customer. The customer never had a choice in terms of how they want the delivery to happen. And that's where we feel that, hey, technology per se has kind of done a transformational shift, specifically on the BFS side. Insurance is a laggard. Globally it is, and more so in India. And that's where we are kind of working with players and incumbents there to kind of make a transformational change on the insurance side.
Great, thanks, Rohit. So I think interesting perspective there that a little bit of a shift towards consumers having a little bit more visibility and choice in terms of how things are done. I think we'll delve into that when we circle back to you. But for the moment, let's go to Anil. Anil, we'd love to hear a little bit about you and ToneTag and your views on today's topic.
Sure, thanks, Prasar. Yeah, thanks, and welcome to all the panelists as well. Myself, Anil, and I am the CTO at ToneTag. I have been working and associated with ToneTag since last 4 to 5 years. And prior to this, I worked with multiple big conglomerates, the likes of Oracle and i2. And what we do at ToneTag is pretty fascinating. So we are obviously we are a technology company, correct? And that technology is it's like probably a boon for the time of COVID or pandemic time, because our technology is a touchless technology, it's a contactless and proximity communication technology. So it's a software which we have built, correct, which can make the two devices to talk with each other like the humans do, correct? And we use that tech primarily into multiple use cases. One of them is payment, and that's why I think I'm here, surely. So in terms of doing the payment, what we do is we say that at ToneTag, we are trying to invent the experiences, correct? So we are certainly looking for like how the payment should be done eventually, correct? Like back then we used to do barter system, and then obviously cash is one of the way, but there is as well a friction. But cash, it works. When you give the money, it always works, correct? So now how the digital payment should happen, correct? Eventually, then obviously there are multiple ways it is currently happening, but how it should ideally happen in the digital world, correct? That whenever I do a payment, it should just happen. There should be no failure, come what may, correct? And it should happen with my consent. It should not happen automatically. It currently does in some cases, but it should always happen with my consent, correct? So that's kind of a thing, and that's the kind of experience we are trying to see and provide. And that's the obviously a journey. We have obviously not yet there, but yes, we will probably reach there. And in terms of doing that, what we have done so far is first time on this planet that we have enabled the card swiping machines, the EDC machines, to be integrated and talk to the phone, so that you can now don't need to give your card and touch and all those things, correct? So you can do the payment on the card swiping machine using your mobile itself, correct? And we have a patent on those technologies, and this is currently live in India on 300,000 card machine. And that's the kind of a thing which we are currently doing on the payment space. Now coming on to the topic, correct? That yes, how the evolution should be, correct, and how 5 or 10 years down the line we should be looking at the finance, how it should be done. As I said, correct. Ideally, we have a frame of mind that yes, when I go and do any transaction, correct, I go as a customer to pick up that thing. So let's say if I walk into a coffee shop, I go and have coffee. I don't go there to make payment, correct? I obviously have to do the payment because that's very critical. But is there something which can be done so that I just go there for what I want, which is to have coffee, and payment is a byproduct which just happens magically. So that's the kind of a thing which we want to take it to. So that's probably how we look at. And yes, from this perspective and in today's pandemic perspective, it is completely significant to talk and discuss about that. Similarly, if you go into like a insurance, correct, or to in terms of investment, yes, I earn money, but I earn money to not grow that money probably, like actively. Obviously, passively, I want that to grow. So it's like that saying, correct? We used to say in the when in old days, and even now also, that money does not grow on trees, correct? If something can make it happen that way, that okay, yes, it is growing automatically without you doing a lot of things, okay, whether to invest in mutual fund, FDs, wherever, correct? So if there is some algorithm, or if there is some robot, if there is some avatar of me which can be created, correct, which takes care of my risk profile and does all those things in the background, obviously again with my consent and with a greater transparency, so I know that, correct? So that's the kind of a thing we want in the investment perspective, correct? As a human being, if I ask for myself, correct? Similarly for insurance also, correct? Why should I pay the insurance if my car is not getting driven right now, correct? So maybe the insurance also, when I take out my car, I should just pay the insurance. So that's the kind of a evolution probably we are going into. So that's the thought process.
Great, thanks, Anil. I think a lot of these interesting perspectives have been coming out over the past few years, but especially the part in terms of making payments or money an item in the background rather than the primary objective. I think it's something that's a goal that most financial companies are pursuing. I think it'll be interesting to hear a little more when we circle back. But meanwhile, let's move to Anurag. Anurag, a little bit about yourself and Nivesh, as well as your thoughts on today's topic.
Sure. So good afternoon, Prasar, and good afternoon to all the other hosts and panelists. So I am founder and CEO at Nivesh. My background has been in financial services. I worked in different areas and research, data, technology, distribution, and I've been part of 2 startups prior to Nivesh. My first startup was mutualfundsindia.com, which was where we were providing information on mutual funds to retail investors. This was way back in 99, when internet in fact was just started, and even mutual fund industry was at a very nascent stage. And then we created more products for the industry, and eventually this startup was acquired by ICRA, which is a rating agency. Today it's a subsidiary of ICRA. And then I worked with another startup, Gridstone Research, which created a platform at a global level. And that technology also was acquired by large players like Bloomberg, FactSet. After that, I worked with the Delhi-based financial group, Religare. They had an IT company, and we were providing solutions to various large players like Tata Capital, Sharekhan. And then I realized, that there's a huge problem of penetration in India for financial products. And there are a lot of macro developments that were happening. For example, KYC was becoming easier, payment related innovations were happening. So I thought it's a good time to, look at the transaction side of the thing, and that led to setting up of Nivesh 5 years back. So Nivesh is a mass market investment platform, providing end-to-end, investment cycle to a retail investor. So right from asset allocation, what should be the right asset allocation for a particular financial goal, and then within the asset class, what should be the right kind of schemes, executing the transaction, and then not only executing the transaction, tracking it through the, let's say the entire investment journey, because goal may be 5 years, 7 years down the road. So if there are external movements like current uncertain times or lockdown that happened a year back, what could be the rebalancing propositions? So all of that is taken care by the platform, and we work with a lot of individual distributors. So we believe, because a country like India, everything cannot be DIY. You need assistance in something like investment. So, and there are a lot of financial distributors who are selling products like mutual funds, insurance, and so we are enabling them through the technology, so that they focus on engaging with the customers, talking to them, and holding them, and everything else is taken care of with the platform. And it has worked out very well during this entire phase, because you can't go out of your home. You have to be supporting, servicing your customers. So through the technology, we've been able to enable about 1,000 such distributors so far, and we have distributors and customers spread all across the country. And the topic is definitely very, very relevant, and because I think technology is going to change the way India consumes financial products, and rather more than India, I would say Bharat, the tier 2, tier 3 towns, because penetration is a known problem, and we believe access has been one major factor, right? Because you may have awareness, you may want to invest in a good product, but unless you have access, how do you really go ahead and invest? But technology is creating that access, right? So if you have a mobile phone, you have internet, you have so many options available today, right? So I think technology will now facilitate movement from transactions to more value addition, right? So earlier even transaction was a challenge, but today transactions are becoming easy because of technology. So you can look at things like asset allocation, rebalancing. All this can be enabled through technology, and scale can be achieved, and it can be delivered to large number of customers simultaneously, in a very objective manner. So that is my 2 cents on this.
Sure. Thanks, Anurag. I think very interesting when we look at the future of finance, we look at this entire space. We think too much in terms of payments and the investment part, about how investments can be enabled and made much more substantive in terms of, for example, simple stuff like rebalancing that you're talking about using technology, that seems to get missed out. So I think I'm sure that gives an interesting perspective to our viewers as well. But I think the most talked about area in finance these days remains cryptocurrency, and I think our next panelist Sathvik is very relevant from that perspective. So Sathvik, I'd love to hear a little bit about you, your company, and overall, obviously about the topic, but also how you're perceiving the entire environment for cryptocurrency in India, both from a retail and regulatory perspective.
Yeah, sure. So I'm Sathvik, the CEO at Unocoin. So we started the company in 2013. So the reason for me to start this company was my previous profession, where I was getting payments from abroad, and I had to mandatorily use PayPal as my option to receive the payments, where I was losing about 3.9% as a transaction fees and another 3% as a conversion fees. So I lost about 7% of the money for my business for about 3 years or so. And then when I was looking at what are the better opportunities or options to do this kind of transfer from one country to one country without getting siphoned off with so much of money. So that made me stumble upon Bitcoin. And this was the year 2013. So that is when I happened to go to a meetup, found a few co-founders for the company. And I took this business opportunity because the US had Coinbase and Japan had Mt. Gox. Europe had one company called Bitstamp, etc. But there was no such company providing services for India. Right? So that made us start Unocoin. Right? So, and we are a simple buy and we started as a simple buy and sell platform for Bitcoin, and then we started providing merchant services where online merchants can accept Bitcoin as a mode of payment, and then we built a POS app for mobile phones that made even the physical store requirement of merchants to start accept Bitcoin as a payment as well. We provide various products like systematic buying plan, which is equivalent to SIP of mutual funds, but for Bitcoin, where our customers average the cost of the Bitcoin purchase over a period of time with a frequency of daily, weekly, or monthly. And we also provide some utility services like where people could pay using Bitcoin for the utility bills like mobile phone, prepaid, and DTH connections, etc. So yeah, in 2018 we also started an exchange. So till then we were only a buy-sell platform. So apart from Bitcoin, we also provide the similar services for different cryptocurrencies like Ether, and then we have Ripple, Litecoin, Bitcoin Cash, VAT. Like that, we have about 35 tickets. So for which we provide the required services. Our team strength is about 40 of us, and we have raised about 4 rounds of funding so far and going quite strong. So the obviously, like, I mean, as per my story, you would have understood the reason why I got into this space is because see, I mean, the internet is bringing people closer. Okay, and the way that people communicate, which used to have some kind of restrictions or let's say some kind of cost when it is from one country to one country, that eventually got eliminated because of the internet. But the transactions that is supposed to happen, so that kept the way it is. Because I mean, it could be about the fees or conversions or the complexity, the regulatory aspect, restrictions. So everything made it in such a way that it just became a part of the system, which was only getting tougher and tougher. And I think the cryptocurrencies are providing the required alternative, I think. So I'm not talking about the regulatory aspect of India specifically yet. I'm more looking at it as a technology perspective worldwide. So when it comes to the regulatory angle within India, India being one of the highly regulated countries, there are some aspects of cryptocurrencies, some aspects of the blockchain technology, which fall into the present rules and regulations and such, but some aspects are not in line, and this essentially needs some kind of rewritten regulations for this particular industry, right? So, for example, when say internet-based banking came into existence, or it could be payment gateway came into existence. I mean, that didn't exist at one point of time, but eventually, as the technology was growing, we needed to provide that kind of services for Indians and the Indian companies. Right? So eventually, this will also happen. But given there are different aspects of this technology, could be about not somewhat anonymous in nature, etc. And traceability is a problem. So, like how we faced some issues when the internet did come into existence, they're like how the communication can happen between bad actors, etc., and how things could go wrong, how some kind of transactions could get through without such things. So similarly, there are some challenges, but eventually the technology will answer. Will only figure out the required, like what can be done, what cannot be done, and what can be achieved using technology. So this is, and obviously when we see cryptocurrency and blockchain, I think it's just about technology that people use to send and receive the money. Money is being one part of it, but I think we are more focusing here about the method in which this money moves, right? So which is more about banking, more about finance, right? So we're not we're not talking about what you sent, right? We're talking about how you sent, right? So and then we also talk about, like, let's say if there is a need for finances, right? So then how the smart contracts or something like that would be of some help, right? So yeah, and I believe this has a great future. Maybe in about 10 years down the line, this will be a topic that like how people know about banking today. Eventually they know about cryptocurrencies and transactions as well.
Excellent. Thanks, Sathvik. So, I think interesting perspectives from all panelists. It's obviously great to hear a little bit about what y'all are doing and how y'all are innovating in the market, but also in terms of the topic. If I could just quickly go back now to Rohit, right? In the market that you are in, right? You're looking at changing the way insurance as a business functions, right? You may be focused on intermediaries, etc. But with what you're doing with AI, etc., right? How do you see this impacting the entire business in the medium and long term? How do you see change? We have a certain way that has been evolved over the last few decades that we do business, but the last few years have changed it completely. Financial technologies, AI, ML, etc., coming in. So how do you see the entire space that you're operating in change over the next 5 to 10 years?
I think a very, very pertinent question. So I think we as human beings and the world as a whole are used to seeing a lot more black swan events than what previously used to happen. So the frequency of these black swan events is far more quicker now. So we had a demo in 2016, maybe a man-made black swan event, but did happen. Pushed digitization on the payments front. GST created another scenario, and then coronavirus basically has pushed digitization to the core. Now, what's happening right now, you say, like, if you talk to any futurist in the market, they will say that, hey, to understand the future, you need to understand the past. And you need to understand what is happening right now. So there has been there has been a push towards digital in the insurance space. There has been talk about, I usually don't throw the term AI very, very frequently because I assume folks in India, the market is still maturing for us to even talk about AI-led services. So there is a lot of rules-based work that's being done right now in India, which will eventually mature towards the AI-based solutions. So for AI to work, you need humongous amounts of data. And what's happened is, like, you have traditional incumbents like banks, insurance companies who've been sitting on a treasure trove of data. Like they've been in this business for decades, to say the least. They have humongous amounts of data, but they haven't really utilized technology to the core. It's more been a sales-driven process, quarter-on-quarter growth. If there is a new technology coming into the picture, how do I kind of, as I said, use my current process, paste it there, and basically let the process do what it is doing right now. This is something we saw last year. When the first wave of Corona hit in March, April, there was a massive push, like, hey, we want to digitize this entire chain. It's all digital, sales are going to happen digitally, right from incumbents to insurers. Everybody wanted to do that. As the wave kind of subsided come September, October, all of them kind of, felt away. Like it was like, hey, yeah, digitization, it has to be done, but it is still not the core for us. So the pressure of business which came to them last year in the first wave kind of drove them to this conversation. They did something, patchwork of band-aids, but then they kind of again left it. Now the scenario is again similar to what it was. It's worse than what it was last year. If you see insurance sales, they kind of tapered down in the month of April. You hardly see any transactions happening right now because all your agency channels are basically not working. Your bank assurance is closed. There is no way for you to kind of reach out to the end customer. And insurance as a product, for whatever we may say, is a push product. It's not a pull product that you and me kind of wake up in the morning and say, I'm very excited that I'm going to buy an insurance policy today. It is a push product because we don't see immediate benefits out of it. So for digital channels to kind of adopt it, push it, is still some time down the line. I will just give you some numbers from an insurance perspective as we're talking about it. Uh, in India does around $100 billion of insurance GWP in a year. Only 0.5% of that, that's around $500 million, is done by D2C firms, like the Policy Bazaar, Settlements, and others. The remaining 99.5% is either through, a majority of that is kind of controlled by LIC and their agency channel, or banker, or brokers, or intermediaries. So the push towards digitization, it is there. Insurance as a business, what we know is it is going to be an assisted sales market for the near term. Does do newer technologies help? Yes, they definitely do. And as I said, coming back to the initial point that I was saying, what it does right now, and what it's doing with startups, with incumbents, as well as new age players, is it's generating data. It's generating data. This data set will go into AI models as we move forward. If anyone tells me that right now they are doing something on AI in insurance, I will be surprised. Nobody does that in India. It's primarily rules-based. 5 years down the line, we are expecting, like we are working on that sphere, like we're expecting around 1 million policies being sold through our platform in a couple of years' time. Now, that is the data that gets generated on the platform. For us to actually build models on top of that makes sense. Otherwise, right now I will say, hey, there's a push towards that. There's a push towards digitization. Let this phase first kind of finish. Let's increase penetration. So from an insurance perspective specifically, you move towards the hinterlands of India. I think Anil mentioned this thing when he was giving his introduction that one of the issues is that, hey, how do you increase penetration in tier 3, tier 4 in villages in India? They don't have access. There is no digital access to sell services. Coronavirus policies were kind of built last year. There was a huge push towards people to buy it. But I can guarantee you, sitting in a village in West Bengal had no idea that they could purchase the coronavirus policy online, because that's where the cost of distribution and expansion becomes exorbitant. Now that's where digital kind of helps in pushing that, but at the same time, it also generates enough data set for insurers, for people like us, for startups to actually start creating models that will make sense in the future. To say, hey, 2030, yes, it's a fully digitized value chain. Yes, it is AI driven. It's no longer rules driven. I know the risk profile of a person. I know why this person needs insurance, and I can set him the right product at the right price.
Sure, thanks. Very, very interesting perspectives that are coming out from all of you, and I think we are going to see a lot of these changes. And to pick on that point about tier 3 and tier 4, I think Anil, in terms of payments especially, right? How do we take digital payments to tier 3, tier 4? How do we make it much easier for them to make payments? How do we get them to trust technology? And how this can change the economy? It's a bottoms-up growth, but how does it percolate upwards? What are you seeing at ToneTag, and more importantly, what is it that you see yourselves doing, and how do you see that impacting overall the domain? Need to unmute yourself, Anil.
Sorry about that. Okay. Now I'm saying, fortunately, we are doing that, in fact, as we speak. So our tech, as I said, that when the tech was built, it was kept in mind that we should be able to make use of just the power of sound. And for sound, we just need a microphone and a speaker, correct? So, and that microphone and a speaker is there in all the phones or most of the devices built on the planet, correct? And it will continue to be so, correct? So we are harnessing that, and what that gives us is a flip that we can then use the people in tier 3, tier 4 who are using the feature phone, because they don't have the smartphones, the apps, the internet, the data, correct? Which we are privy of, or which we are utilizing. So that kind of has enabled us, and we are working as we speak with the regulators, with RBI, with NPCI. In fact, we have done a sandbox testing. It was live for 3 months, and the results of that are going to come out, correct? So what that does is that a person with feature phone, without any application, without any internet, can do the digital transaction. And I was privy of one few of them, like those transactions, and the people who are doing those, that the wow moment that okay, is that possible? Thanks to the UPI infrastructure also, which have been put in place, correct, which has really helped in getting this adoption faster. Because with UPI, what we get is that okay, your phone, your bank is in a way linked with your phone number primarily, and then through that you can do the debit and credit, correct? So that has helped, and that with UPI and feature phone and our technology, that has been made possible. And this is in a way the journey, correct, where we want that okay, the digital, what is the ideal world of payment, correct, we are taking that, but we can't leave out we cannot leave out a majority of the people as we speak today. Obviously, still we have 45 to 50% feature phone users in India. It might not be the case elsewhere, but yes, in India, it is like 50%. 50% is approximately a majority, correct? So those people, we cannot leave it out. And that's where our tech obviously has helped. Now, what we have done, apart from that, is that the UPI rail, which have been built, correct? We know that yes, UPI is very, very successful. There are billions of transactions happening every month as we speak, correct? And that obviously is giving a lot of data to be harnessed, to be looked into, to find the patterns, and to help the regulators, or not only to regulators, to also help in many cases income tax department, correct? Like yes, we are seeing that whatever we are doing digitally, there are fingerprints of those, and those fingerprints are utilized by the regulators. It can be income tax, it can be any other regulator, correct? And those are kind of helping the economy in terms of positively, correct, because of the tax compliance, correct, probably will increase. Because I know that like third week of March, there were 4 lakhs SMS or 4 lakhs mails were sent out to the people who did not declare their income from the FDs or from HFT transactions, correct? So that is possible only by digitization each and every digital transaction, each and every payment transaction, correct? And there are multiple such which are happening, which are going to help the economy. And if this keeps on happening, correct, what it means is then that person who says that, okay, fine, I am not an income taxpayer, maybe, and I'm below the poverty line, but the digital fingerprints which he is leaving behind is not corroborating that fact, then it helps from that perspective positively to both economy and to the country as a whole, correct? Because that at some point in time, he will realize that, okay, there is no way for me to escape now. So I have to get into that, correct? And he'll start becoming more compliant. So we will be seeing compliance becoming more and more a norm rather than just, okay, it's a forced compliance as of now, correct? Because there is a TDS and that's, yes, all those things are there. So that is how it will probably help to the economy as well. So yeah, so that's how we are helping.
All right, thanks so much for those insights, Anil. I'm sure these are topics that each subtopic that we're talking about probably requires a panel discussion to get perspective on. But I think we will circle back to that another time. We hope to keep getting deeper and deeper into these subjects. But coming to Anurag, technology is obviously driving payments, but an interesting view that you're taking in terms of what you're doing is helping technology drive investments, right? How do you see the penetration, for example, in tier 2, tier 3, tier 4 cities increasing as technology becomes ubiquitous? And how can we use, so for example, when we see how WhatsApp, for example, has percolated so deeply in the country, how can we use some of these emerging, technology? They may not be cutting edge, but stuff that people are really comfortable with. How can we use that to change the way the future of investing looks like for this country?
Absolutely, you're right, and I fully agree that technology need not be cutting edge. It should be simple, user friendly, and I think ease of use is very, very important as we are talking of going to tier 3, tier 4. Because they can't understand the complexity that we like to talk about. It is very difficult for them to understand. Let's say if we take an example of mutual fund, what is a large cap, what is a mid cap fund, what is small cap fund, And if you try explaining, they'll get confused and, they would say, okay, forget about it. I'm happy with my bank FD. I know, what I'm getting at the end of the day, right? So that's where, technology plays the role by cutting, these choices, presenting what is relevant to that particular customer profile, right? So if you, let's say, conservative customer, looking at a shorter time horizon, then, technology understands that, okay, he's good for maybe a short-term debt fund, right? And so there is no subjectivity here because technology can be very objective, right? So, your chances of going wrong, the mis-selling that we talk about are pretty low, right? And there can be more checks and balances. If there are transaction failures, that can be, highlighted, alerted, and it creates a lot of transparency, right? And the cost of doing transaction goes down significantly. So in the physical world, the challenges were that, if I'm doing 1,000 rupee SIP, and today, because the brokerage rates are, going down, if I'm earning just, let's say, 10, 15 rupees on a transaction, why should I even do that? Right? But because technology, you have very, small, insignificant incremental cost, you don't mind doing the transaction. And then transparency, because we come across a lot of investors who say, okay, I did some investment, 5 years back, I have no idea what's happening. And what we have seen that, the usage of our app is very high by the end customers. They like to track their investment. And now because they can see what's happening to their investment, the awareness is automatically getting created, right? See, awareness can't be a theoretical exercise, right? So once they make an investment, they track it over a period, they understand, how it works, and then you see more repeat transactions coming from those customers, and their confidence is much more. When they're able to place redemptions online, money comes into their bank account 2-3 days, so they know that, okay, everything is working fine and I can invest more, right? So it's a gradual process, but, technology will definitely, will be the key enabler for, increasing the penetration. And, technology like WhatsApp are going to help a lot because WhatsApp has, for example, given business APIs. So through that, you can do a lot of transactions through WhatsApp itself. So we are also integrating with them today. We are kind of sending alerts and notifications through WhatsApp. And, we are soon going to even enable transaction kind of thing also through WhatsApp, right? So as we make it simpler and accessible through, these kind of platforms, we'll help, increase the penetration. So that's the whole role of technology. Earlier you would take, 5-page form to fill up for a simple SIP. And if you're doing 5 SIP, you can imagine, filling 5 forms, and people, you can even see how many people can fill that form correctly, right? So if there is a small error, small overwriting, the form will get rejected, and, numerous issues will happen. So technology is definitely playing a big role in, simplifying things and increasing the penetration.
Great, thanks, Anurag. So I think we all hope that it'll be easier for us. We can do a one-click investment and not have to go through those 5-page forms
Exactly.
very soon. I think we have all those capabilities. A little bit of regulatory and a little bit of entrepreneurial drive can help do that. So I think thank you for giving us those insights. Coming to Sathvik, I think Sathvik, the domain that you're operating in obviously remains most in the news these days. But a lot of people have concerns in terms of what's the future of cryptocurrency. While digital currency is something that's evolving overall, but as a subset of that, cryptocurrency does seem to have certain concerns that people have, right? As a business, how do you address that? And from a strategic perspective, how do you see that impacting the viability of your business, and how are you looking to future-proof yourself?
Yeah, I think, cryptocurrency is a part of digital currency. It's just like a part of the subset. But whenever things become digital, it not only is enabling a normal citizen to take the advantage of being it digital, but there are also bad actors who had difficulty in making their transactions or communications go through in the traditional ways. The moment it became digital, it's easy for them as well. And usually, a lot of times, they are the one to switch from traditional methods to digital methods sooner than the people who are actually in need of that kind of technology because of the day-to-day activities. Okay. So when we say bad actors, we are more talking about someone who could launder the money, who could use this to, import some drugs or terrorism, financing of terrorism. So whatever the banks generally face, right? So all 4, 5, 6 different things are to be processed. The same thing applies here as well. But the advantage for banks is that most of the times they will have the KYC, or let's say all time they will have the KYC, because it's happening through some kind of bank account which only got opened through a proper procedure in place. And when it comes to a business like us as well, we also do the similar kind of KYC procedures before we provide accounts to our customers. So here is a tricky part, right? So when the transactions happens at the bank level, then bank is able to provide some kind of insights into those particular transactions. And if the transactions happens at cash between two individuals directly, then obviously bank have nothing to do with it. But when it comes to the cryptocurrency, there is no two such different modes where it's happening through bank or it's happening through cash. It's cryptocurrency for anyone, for everyone. So what that means is if it is happening through some kind of exchange like ours, then there will be some kind of trial that we may be able to establish. And when they take it to their own wallet and try to do another transaction, which is not even visible to us, even then the same cryptocurrency will have to take the beating.
Sure.
So and that is where the tricky part is. There are transactions where the advantage of this being digital and this being anonymous is taken. I'm definitely not saying no for that. But if you see the overall percentage of transactions in which this happens, that probably may be about 1 or 2%. So which means there is 98 or 99% of the transactions, the value of transactions are happening for something that where they're utilizing the digital nature of cross-border transactions or within the country or for whatever reason. So globally, that's how I'm saying this. So when it comes to the company like us, it's obviously, like I said, we do the KYC procedures and then we allow every transaction, whenever it is a buy or sell, to happen through their bank accounts, which means we don't have any kind of cash credits or cash debits from our customers. And then we make sure that the bank account from which our customers are sending is the same one that they registered with us, for which they have provided a cancelled check leaf, a photograph, etc. So that as much as possible we know with whom we are doing the transactions with. That at the business level there is no risk, but at the technology level there is still a lot of room to grow to make it compliant. Just what I say.
Great. Thanks, Sathvik. I think the world of cryptocurrency is fascinating, and as is all the topics that we went through today. It's I feel whenever I'm running a panel that delves deep into technology and how it can make a difference to business and life, the session times always fall short. I'm getting buzzed at the background saying that it's time for us to wrap up. But I think these are discussions that we need to probably catch hold of, all of you again, and go through each of the interesting topics that we came up today in detail, and we hope to do that soon. But for today, I thank you all for taking the time and giving us these deep insights. We really appreciate you, and we hope that you, your family, your employees, and everybody around you stay safe. And we hope to see you soon, very soon again on another of Businessworld's platforms. Thank you for joining us today.